Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. Tech stocks in general, and particularly Facebook, got sort of pretty much trashed last week after the earnings from Facebook. On the face of it, they were just slightly better in terms of earnings, but the guidance was potentially a little bit soft, and we're still potentially running into a few sort of issues. Obviously, Facebook has had some pretty well documented issues over the last sort of 6 to 9 months. What really was pretty much unprecedented is that the sell-off took about $125 billion off the share price. Put it down by around sort of 20-25%, which really was pretty much unprecedented. Given that say earnings were just slightly better, but sort of guidance was a little bit softer, but certainly not 25% softer. So it really had a major sort of spillover into obviously US equities and obviously global equities as well, as sort of pressure mounted, and especially a lot of these index fund and these sort of ETFs, sort of passive investments. As people start withdrawing money out of those, then there is a knock-on sort of sell-on effect, which takes the share price lower. More people take money out, and it's a bit of sort of an ever-increasing circle. Now, potentially Apple could be a little bit of a bright sort of spark out there, and potentially could sort of stop the rot, and just be very interesting to see how their earnings sort of come through in the next sort of couple of days. And against that, you've got potentially a little bit of sort of thawing and a little bit of softening in terms of the trade war. Potentially China and the US are looking at sort of potentially sort of getting together and trying to sort of negotiate a deal. You've had some potentially pretty good news coming out of the US and the EU as well. Trump initially sort of saying yes, he's going to put sort of tariffs on there. Then 3 or 4 days later, sort of actually talking, actually, we don't really want any tariffs, we just want free trade. Potentially there was a little bit of a sort of softening and a bit of easing in terms of the EU stance as well, and it'd just be interesting to see if that does sort of play through over the next sort of 2 to 3 weeks. And beyond. Certainly the data out of the US is still pretty strong. The latest GDP figures were just over 4% for the second quarter, and the first quarter was revised up as well. So, really a pretty strong, robust economy, over 4%. There was a little bit of talk that a lot of that was, sort of potentially deals getting done and goods getting shipped before the potential tariffs coming through. So it will be interesting to see if the third quarter numbers do back up this sort of strong economy coming out of the US. But if it does, then the Fed is certainly on track for a further rate increase in September and one more in December as well. Trump still has his own sort of personal issues going through as well, with sort of various investigations. Certainly his lawyer, his ex-lawyer, it's going to be interesting as he's sort of looking to sort of take the stand and potentially have some pretty incriminating evidence in terms of recorded conversations, etc., between himself and now President Trump. You then have his current legal team led by Rudy Giuliani coming out and say, actually, collusion, it might not be illegal. Trump has obviously always denied there was any collusion between himself and the Russians leading up to the election. But I say, Giuliani's now come out and sort of tried to muddy the waters and said actually collusion isn't illegal, and possibly there might have been some or there might not have, although the president sort of always denied it. Again, it's maybe just potentially trying to put up a little bit of a smoke screen and trying to just diffuse the issue. Oil still well off its highs, sort of back in that sort of, really sort of 67, 70 range on WTI. And at present it doesn't really show any signs of sort of trading a little bit higher. But more importantly as well, it's not showing any signs of sort of getting back through sort of 65. Brexit really getting down towards the sort of business end of proceedings now. Prime Minister May has now said that she's actually going to sort of take a much sort of firmer hold in terms of negotiations. She's on a bit of a sort of charm offensive at present, trying to get her sort of views and proposals sort of agreed by the EU. Really is running out a little bit of time though, because you need to get that sorted out, say by sort of September, etc., to get the various parliaments to sort of ratify it in terms of seeing a Brexit by sort of March 2019. Those sort of conspiracy theories, there are a little bit of talk as well that, potentially Johnson and his sort of crew were looking to try and engineer a sort of hard Brexit, and that's why he resigned. And that potentially could still be on the cards if you don't get anything sorted out by sort of March 2019. Quite a few central banks meeting this week as well before the sort of big sort of summer break, if you like, certainly in the Northern Hemisphere in Europe. August is pretty much, a month of sort of holidays out there. Will there be any surprises? Potentially the Bank of England could increase interest rates, and that would be really very interesting then, as you sort of obviously got still Brexit negotiations taking place, but, you still got a reasonably sort of firm economy. Here in New Zealand, the government's still under sort of increasing pressure in terms of pay negotiations. We've already had the nurses strike, we've got the IRD, we've got MB, we've now got primary teachers now voted to sort of strike as well in terms of their sort of pay negotiations. And, at present, the government doesn't really seem to be able to make much sort of headway. So certainly quite a bit of pressure out there on the government. New Zealand economy is still pushing along at a pretty reasonable rate. It's just going to be interesting to see, certainly on those interest rates, whether the Reserve Bank does sort of get forced into hiking rates probably sooner than it sort of anticipated as a result of sort of global pressures coming through on increased interest rates. If you are looking for income options, certainly quite a few alternatives available out there. Give us a call on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We look forward to speaking to you soon.